Welcome. Today I'm going to be doing something atypical. I'm going to be doing an armchair analysis on the company Smith & Wesson. Ticker symbol is going to be SWBI, and I believe it's traded on the NASDAQ, although that really shouldn't matter for you. So what I want to do is, first, I'm going to test my audio levels. I guess it's a little hot. Second, I'm going to do the stock and price action. I'm going to check that out first, and then I'm going to do a quick overview. And second, we're going to take a look at the company at a glance. Then a little bit of a deeper dive into the financials and how that's going. Then some statistics and ratios that we may want to be mindful of as investors. Talk about the risks briefly, a few of them. And then finally, I'm going to finish with the fact that this is not financial advice. And you guys should do your own research and due diligence. This is for entertainment purposes and this is my due diligence, not anyone else's. All right. So without further ado, this is a chart of Smith & Wesson. This is also the overview page. It looks like the company's been roughly around the same price, traveling from the 20s, low 20s to all the way down to the single digits, sometimes $2 in 2007-8 and in 2011. It looks like the most recent lows were about $5.76. Most recent highs are this $30 price action here, $31 on June 27, 2021. I'm guessing this is a reaction of quarter report that was extremely strong, and then there's been a correction since. The price is now sitting at $17.95 after a 0.5% down day today. Smith & Wesson is a company that makes guns for recreational use, for other uses, for police force, for military. I actually came close to buying a Smith & Wesson gun because I just think they're really, really nice guns. I'll show you their website. So I already clicked on pistols because I want to show you the gun that I was going to get. So this is kind of like their flagship pistols. I think this one here in the picture, 2.0. And then, but the coolest pistols in my opinion are the 1911s. I just love 1911s. So look at this one right here. Okay, now this is a really beautiful pistol in my opinion. So they're great. Obviously they're a little bit over decorated, this particular one, but I'm just a sucker for that. I'm not a competitive shooter, I'm not a police force or anything like that, so I'm just a recreational target shooter, and this is just great. So I think the product is very good. I've shot 1911s from Smith & Wesson before, and I really like the pistol. So I think the quality is good. I know from firsthand, even though I actually ended up buying a 6 Hour at the end because of just the price difference. I do appreciate this gun, and I probably will get one at some point in the future. Next, I want to do a little bit of an overview of the company. The market cap of the company is about $1 billion. The revenue trailing 12 months is $1.1 billion almost. The net income trailing 12 months is $280 million. The PE ratio, the price over earnings, the stock price over the earnings is 3.31. Over here, it's helpful that they put the news articles right up at the front, so you kind of see what this company is dealing with day to day. So it looks like there's some kind of challenges here in New York that might allow victims to sue gun companies over gun violence, which is obviously a very big negative for gun producers. But also a really cool thing here on stockanalysis.com. By the way, I'm not affiliated with anyone, so I just use this website because I think they're useful and I like free products. So you can see here, but that there's a little bit of red in 2020. Although I don't think that's the case, there might be some kind of error here because when I was looking at the numbers, they didn't confirm this. So we'll go in soon and we're going to explore that. But you can see how the company makes profits pretty much every year, and the revenue is decent. There was a very dangerous decline in revenue between 2017, 18, and 19. And as you can see here, if we continue that trend, the company would basically go to zero. But things changed, and I'm guessing that this 2020 number is this pandemic related. Next, after the overview, let's take a look at the company at a glance. All right, so I like FinViz for that. So on the FinViz, you can see all the numbers that I care about here on the left. So you can see the price to earnings, the forward PE. You can see the PEG ratio. See price to sales is very good. Price to cash flow. So it looks like they have very little debt. All the numbers that I care about are right here. Here's the market cap, the income, what the sales look like, 1.1 billion. They also have the cash per share, which is quite substantial here, 3.26 for every $18. That's not bad. Also, their dividend is almost 2%, so that's nice. And the employee count, which is very helpful for me personally. Things that I like to consider on this page as well are the return on assets, return on equity, and return on investment. You can see how those numbers, those percentages are enormous. That is unsustainable, right, relative to history, since we looked at some of the previous years, and we know that this company has experienced some explosive growth here as of recent, and that's not likely to continue at this trend. So that's the company at a glance. You can see here that analysts think that target price of the share is going to be $27.25. Short float is a little bit more than average. It's about 7%, so there's some significant number of people shorting the stock. Probably because there's still some investors who think that the company might continue its ridiculous upward trajectory, and these shorts are trying to take advantage of that, I'm guessing. This number is also kind of useful here, the beta on the right. If the number is below 1, what that means is that the volatility of the stock is expected to be less than the overall market index. And I'm kind of surprised that this number is under 1, because an individual stock usually will have a volatility that's greater than the market index. But, you know, I don't actually know how they rate this, but it plays a very important role in risk management. So this is kind of the number that professionals go by. So it's important to keep in mind. So now that we're done with the overview, let's go to the financials, shall we? In order to do that, going into the website here, the stockanalysis.com, we're going to click financials right here, or you can actually access it a different way. You can go up top here, just click on the financials tab. Now you can see everything you need here from their income statements. I have it set to quarterly at the moment, but if you want to look at it annual, this is it annually, quarterly, and this is the trailing. The trailing looks really good, but I like to look at the quarterly. And so you can see some trends here, right? If you scroll over to the little graph over here, you can see the change from quarter to quarter. You see there was a pretty significantly bad quarter sometime in 2019. I'm guessing something funky happened. Maybe they had to pay out a lawsuit or some write-off of charges some sort. But I'm actually not too worried about this anomaly in 2019, mainly because the company's recently increased their dividend. So if the company knew that whatever happened to them in 2019 had a good chance of happening again, or there was some lesson to be learned there, they would have learned it already. They would not be raising dividend in the face of this event happening again. So I don't actually need to even research what that event was. The fact that the dividend has been raised tells me that the company is very confident in their ability to pay some money to shareholders and not have to worry about this tail risk that happened to them a few years back. Going back into the financials here, you can see some of the charts. So this is the gross profit chart. Again, you can see the negative quarter there. But it looks like this company is very steadily profitable. We're going into costs, research and development. Looks like they haven't been spending that much lately. Operating income here. There's a few things I want to address. This is income tax paid. It looks like they didn't pay much in 2018. This is net income here. You can see this big drop in, I think, March, right, in 2020. Yeah. So everything froze out. I'm guessing they probably had to keep their employees on payroll, and there wasn't any revenue or profits going into the company. So just like many other companies during the pandemic, they suffered. So this is an interesting chart here because it shows the shares outstanding, and you can see that this number is decreasing. So they've actually been buying back shares. So when a company buys back shares, what that means is they take some of the cash that they earn. some of their profits, right? And what they do is, instead of reinvesting in technology or instead of paying out a dividend, they go out into the open market, and if they think that the price of their stock is undervalued, or they have some kind of decision the management has made in order to purchase a certain amount of shares over a certain amount of time, they go into the open market and actually purchase the shares outright, and not the shares, all of them, portion of the shares, however much they've decided on. And that has a few effects. One, it will decrease their cash value of the company, so their cash reserves. Number two, there'll also be less shares outstanding. And what does that do? Well, it pushes up the price of the shares. It technically increases the share ownership of the share owner in the company, right? So let's say, for example, I have 100 shares and I own whatever percentage of the company. Once some shares are bought up by the company, my shares are worth more because there's less of them outstanding, so I would own a larger percentage of the company. I hope I explained that right. I mean, understandably. I know it's right, but who knows if it's understandable. These charts are just showing growth here, and you can just scroll through and you can figure out. It says on the left what it means. If you're confused, you can just Google all these terms. I mean, that's basically how I learned how to deal with all this. Here's the dividend. So you can see how they increased the dividend in the last 2 quarters. If they were worried about their revenue stream this much, I mean their earnings stream this much, they wouldn't be raising their dividend so aggressively. These numbers here are just kind of not saying the same thing as FinViz, but you can see. I'm guessing these are, these are quarter margins. So I'm guessing these are more accurate here. This looks a little bit more believable. So the profit margins have been, 22, 28, 27, 24, 21. It was negative here, probably March 2020, but in general, they're in the low to mid to high 20s, and that's very good, I think, for profit margin. Like, for example, a lot of the retailers that operate here, some of the public company retailers, they have profit margins of like between, sometimes negative, but somewhere between like a couple percent to 10% at the most, in order to stay competitive. So, like, I'm sure if you go to like Target and Walmart, these stocks, their margins are going to be pretty low, or Costco. This is not a retailer, obviously, but it's good to have margins on your product. It allows you some breathing room, and maybe you can evolve the company or do whatever you want with the extra cash, including buy back shares, which they have been, or give more dividends, which they have been as well, or grow the company. I don't know if they're trying to do that. They probably are a little bit too capped out, mainly because this company sells guns, right? So they can't really ship those internationally. They can only sell them. I mean, I'm sure they have some deals or whatever, but mainly the biggest market for guns is the U.S. because all the other countries don't believe in the ability of citizens to carry or own guns. I know that the country of origin, Bulgaria, did not allow regular citizens to own any type of gun. I think they may allow like hunting rifles or something. A lot of nations allow hunting rifles for hunting, but they're very strict and they have a lot of rules, and in general it's just very frowned upon. But America's different, so this is a little bit more normalized here, and so this company is gonna, be able to thrive here, but not perhaps internationally to such an extent. Now, this is the financials. I want to go into statistics next. So you can see the total valuation of the company here is $867 million. The enterprise value of the company is $746 million. So what does that mean? Well, it's a simple equation to figure that out. What you do is you basically subtract the enterprise value from the market cap, and you find out how much cash the company has. So those numbers should be pretty equivalent, or cash and cash equivalents, and or cash equivalents. Okay, so this tells you if there's a difference like this, if the enterprise value is lower than the market capitalization, that tells you that the company is carrying some cash. If the market cap is lower than the enterprise value, that tells you the opposite, right? That the company has net debt. Now, there's some dividend info here on the right. It says that the per share dividend is 29 cents. It gives you the yield roughly almost 2% here. The number that I really like to look at is the payout ratio. So the payout ratio means that this percentage is how much of their earnings are they giving out in a dividend at the current time. So if it's 4.8%, that's extremely low. So if you are a REIT, for example, a real estate investment trust, you are required to give out like 90% of your earnings via dividend if you want to preserve some kind of tax status. But a lot of companies give out 30, 40, 50, 60, 70%. Sometimes, if they've had a bad time, a company may choose to give 200, 300% of their earnings in dividend, hoping that they'll make it up down the road, or perhaps it's some kind of cyclical or seasonal company that, the figure doesn't look great for them all the time. That's what payout ratio means. Now, scrolling down here, we can see the 12-month kind of earnings and profits and how much per share. So this is pretty astronomical here at the moment, which is what actually got me to look at this company, because their earnings was crazy. So $5.43 on an $18 stock is pretty phenomenal. But obviously, it's not sustainable, especially given into the market action, right? It's telling us that. So we should listen to what the market's telling us. Here's the enterprise value statistics that I like to look at. So enterprise over earnings is actually 2.67, which is very low. Enterprise over sales is 0.69. It's very good as well. So basically trading like Walmart, like really big retailers of some sort, but except the earnings are way better. Enterprise value over earnings before interest, taxes, depreciation and amortization. Okay. And then enterprise value over earnings before interest and taxes, and then over cash flow. So all these numbers actually look really good. Here are the margins again. I guess these are yearly. And the amount of tax they pay, effective tax rate is 23.06. This data is relevant. Like, if a company, this number fluctuates based on how they treat their books, but this number matters quite a bit. I mean, if you get a company that's paying most of their money in taxes, or a large portion of it, like, you got to factor that in. You got to know, whether or not the company has had some kind of tax event where it can boost or dramatically decrease their taxes. So you got to keep an eye on that as an investor to try to figure out if there's going to be an issue down the road or not. To end this, what I think of the company, right? I really like Smith & Wesson. I think it's great. Their products are great. I haven't tried a wide variety of their products, so I guess I can't really speak for that. But from first-hand experience of their pistols, 1911s, I really like them. I think that that's a very good start to a company. I think Smith & Wesson is worth taking a look at. Looks like by their actions, their management and leadership is confident in the company's ability to produce cash flow and earnings down the road, given by their dividend increase. I think their financials look solid, and even if their revenue and earnings decrease to pre-2020-2021 levels, the company is probably a buy even at this price right here. Now, obviously, this is not a recommendation to purchase the stock at all. Everybody should be doing their own research and due diligence. This is kind of like an armchair overview. It's not a very in-depth look. I haven't actually even read through their 10Ks or whatever, any kind of official statements that are coming out of the company. So there's a lot I don't know. I haven't read through all the articles that are relevant and pertinent to the company, and especially as an investor, one should always seek to be very well educated on the topic. And of course, you must know that just like any stock, this one could go down to zero, like any other investment. In fact, it also has lots of risk. All of your capital is at risk whenever you invest or trade in stock markets, especially with individual stocks, they're very risky. So if you're not sure about this investment or what to do with your money and how to avoid inflation or do all kinds of crazy stuff, you should consult with a professional and make sure that they help you understand all of the ins and outs of managing your money. But keep educating yourself, and hopefully you guys make some money. I actually have bought personally this position through an exercise of a put option that I sold. So I received the stock at $20. It's currently at $18. I'm sitting at a $2 loss at the moment. However, I'm not too worried. I do think it's worth somewhere around there, probably lower 20s at the moment. It's my opinion. So what I'm going to do is probably sell a $20 call against the position, or maybe $21 or $22 call, 22.5, I think there was one, and see if I can profit from the premium while I wait for the stock to do something. And by doing something, I mean either move dramatically in one direction or another, or give a dividend. All right. I think I'm going to conclude right here. See you soon. Peace.